Hi everyone, this is Shayne coming at you. Today we're going to be talking about interest rates coming down, and a question that I get a lot is, should I purchase the property now or should I wait for interest rates to go down? Let's look at the facts. So interest rates have already gone down, not once but twice already. And what is the sentiment for the rest of the year? There's perhaps going to be another two more interest rate reductions. So that's four times interest rate reductions. What does that mean? Let's look at the pros and cons, right? So you can make an informed decision for yourself. Pros are, yes, we're going to get interest rates that are going to decrease. So one school of thought is, do I use fixed interest rates if I'm going to make a purchase soon, or should I use variable? In this instance, when you know the trajectory of interest rates going down and the sentiment is quite high in terms of probability, there's a lot of professional judgment that comes into play, but also sometimes it might make more sense for others, to others than others. So rather than a fixed rate, stick to a variable rate, because I know the sentiment in the market and what's to happen, and also taking into consideration my risk appetite. That's quite important as well. Equally, someone's risk appetite who isn't as fluid and they want to kind of have a holistic picture, they might choose a fixed interest rate, because for them they just want to know exactly the numbers and for their peace of mind and their risk appetite. So that's one school of thought. The second thing is, should I purchase right now or wait until much later? Now let's look at the facts, right? What does it mean when interest rates go down for the average buyer, right? What it means is that those who couldn't enter the market can actually afford to enter the market. So those who are priced out, maybe they have a little bit more, these interest rate cuts help them to get into the market. There's a whole pool of people coming onto the market. So similar to you who are entering the market, right? That's just one part. The second part of that, people entering the market, is the grants, the government grants, the incentives, the first home buyers as well. They're also entering the market, right? So another volume of people entering the market, similar to you. If we just think about demand and supply, it's just in general, when there's too much demand, what does that mean on stock levels? We know at a macroeconomic level that we are behind supply, so we are very much below the dwellings of 240, I believe it was, per month. So add that pressure on top of the demand that is there already and that is upcoming. So you just make a decision based on these facts, what that means for prices. Do we think the prices will go down for the properties, or do we expect the prices to go up? One school of thought, is that the prices will go up. It's a no-brainer. And for those of us that have already purchased, if you're an existing investor, you bought in a good location, not just any location, because people have the misconception that if they just buy any property, they're going to get gains. So if you are already an investor and you have bought in the right suburb, the right pockets, the right type of property, you'll be laughing, because there's going to be the demand pressure in that area, which you're going to see capital growth, which means you're going to have equity quicker in the short term, medium term, and long term, right? If you haven't yet, therefore, gone into the market and you're asking that question, what do you think that will mean for you in terms of prices? So if you wait 1, 2, 6 months, do you think the $400,000 or $500,000 pre-approval that you just got, or $800,000, is going to be able to get you the asset class that you want today, and it's going to be the same in 6 months or a year down the line, and it will still be 500, 600K, 800K, with whatever's happening at a macroeconomic factor. So this is the thinking process around how you make your decision. Should I buy now? Should I buy later? What's happening at the macroeconomic level, and what does that mean for me? and then from that you make a decision based on your risk appetite, what it is that you would like to do. But this is just one little piece of the puzzle. So my name is Shayne Heeralall, and I try and empower my clients to get to the decision-making process with not just education, but with confidence and conviction that the decision that we are doing and the property that we are buying is not just any property. And that's another part of the video which I will talk about the different types of asset classes in terms of units, townhouses, and freestanding houses. So I'll put a bit of an accounting spin on it. So numbers do all the talking for me. My decisions are all based on facts, data, and the trends, as well as how holistically we can maximize the returns for you. So I'm not just a buyer's agent, I'm a property strategist. We buy the property last because what we do is we need to strategize exactly what it is that you need to do, what is your long-term goals, where you're at, and bridge the gap, and how we're going to do that. So most businesses and companies that I've audited, and I've also been a financial advisor for, we need to get the budget, forecast, cash flow right up front, not just the transaction costs, but the holding costs and the hidden costs. Know holistically what's that going to mean for you, not just the property, but seeing what is the opportunity cost. What could I get for this today that I'm foregoing? If I make that decision, what is it that I'm foregoing? And would that get me maximum returns? So there's a lot of planning and strategizing up front before we buy the property. So hit me up if you'd like a free consultation. Happy to run through and give you some strategic advice and direction. If anything, you walk away with clarity or confidence with your train of thought, or a little bit of education in terms of where the gap is. So hit me up, I'm here to help. Thank you.